Hello everyone, welcome to the Nifty 50 weekly technical update. Last week we mentioned that the price action had already broken out of the channel and the next resistance zone of our area of interest is around this supply candle. The price has already swept the liquidity. As we discussed, if the price encounters resistance here again and the price action could follow the pattern we have drawn. If the downward movement continues, the next support level will be in this area. If we examine the zone closely, the price is likely to find support here, or it might also attempt to gain support around the Fibonacci golden zone, which is almost same area. If we need to wait for this movement to see if the price can hold this support zone. If it fails, the price may fall back into the channel, potentially creating a new lower low. According to the daily chart, the actual demand zone appears to be here, so there is a high possibility that the price action could unfold like this. It could take some time to see a reversal, but first we must confirm that price can sustain itself in this area. If the price closes below this zone on the daily chart, we might observe further declines. When reviewing the weekly chart, the situation remains the same. Last week we identified a pin bar candle at this resistance, so it's natural to expect a reaction from that point. The price is still in a downward momentum, and based on the weekly chart, it will likely attempt to hold the support zone. Confirmation is essential because once the price reaches this point, we need to look for a structural break or a shift in the market conditions before deciding on the next action. In terms of indicators, all moving averages indicated a clear downward momentum as the price has already broken down below all of them. The Bollinger Bands, RSI and MACD also reflect this trend. The price has broken down the midband of the Bollinger Bands and it may next try to hold the lower band, although this is not a strong support level, thus we need to be cautious. The RSI and MACD also suggest downward momentum. According to the Ichimoku indicator, the price has broken down and it's attempting to hold the conversion line and baseline support, but there has already been a rejection from the cloud, which further indicates downward momentum. In summary, looking ahead, there are two potential support zones, one according to the daily chart and another in this area. If the price breaks down below this support zone on the daily chart, we'll likely see the price moving into this area. Thank you for watching and stay tuned. Welcome to the Sensex weekly technical update. Last week we updated our analysis and observed that the price faced resistance at two areas, one at the channel and another at a supply candle. The Nifty 50 chart indicated that the price hit the exact resistance point of this candle. Now the price has retraced back into the channel and is nearing the zone we mentioned. If the price rejected from this area, it could potentially fall back to the previous levels. According to Fibonacci analysis, the golden zone or mid zone lines in a similar range. The price has already reached this support zone, so you need to be patient. If the price breaks down below this area on the daily chart, it will likely fall further. Currently, the chart shows that the price is consistently making lower lows, which is clear indication of downward momentum on the weekly chart. On the weekly chart, we noted a pin bar candle on the supply zone last week, which led us to predict a reversal movement. This has since occurred and now the price is attempting to test that resistance turned support area again. We need to monitor whether the price will find support in this area. If it breaks down through the weekly support zone, we may see a sharp decline. At that point, this support zone might weaken as it's shown as a decrease in demand. The lower low is apparent and a gap is visible on the chart. Overall, the weekly chart doesn't present a strong condition. Although counter trend movement can occur in the middle of a downward trend, they do not confirm a reversal, especially given the current aggressive downward momentum. In day chart, it seems the price is trying to hold at the support area with as we indicated last week. However, indicators show that the price has already broken down below all moving averages, further confirming the ongoing downward momentum. The Bollinger Band indicate that the price has fallen below the midband, signaling that it might struggle to maintain support at the lower band, which is not a strong or critical support level for a reversal. And Ichimoku cloud also rejected. Price is rejected all baseline and conversion line also. So in summary, we conclude our analysis. We expect to see continued downward momentum in the upcoming days. We need to monitor whether the price can hold this support zone. If it cannot, it may retrace to lower levels. Thank you for watching and stay tuned for further updates. Hello everyone. Welcome to the S&P 500 weekly technical update. Last week we mentioned that we are close to a potential market crash. If the price cannot hold this support zone and we see a closing price below it, we could experience a market crash or a sharp fall. If we look closely at the price movement, we can observe a significant gap indicating a sharp decline, followed by a continuation with a large gap. We also noted that if the price breaks down from this level, we might see a short-term support here. However, this level has also broken down, leading to a continuation of the trend. When a market crash occurs, it's difficult to identify support and resistance levels because price action tends to be abnormal and aggressive. Therefore, the best strategy right now is to adopt a wait and watch policy. If we check the weekly chart, you can see that we are indeed near a market crash. The current candle is notably significant. According to the weekly chart, we need to observe whether we can establish support at this area of interest. If we do find support, it will take some time to take confirm, as we will need some candles to indicate stability. It's important to remember that any brief counter moves do not necessarily signal a reversal. For a true reversal, we need confirmation and a breakout of the structure. Currently, the conditions are very risky. Looking at the daily chart, we can see a considerable gap from the moving averages. The Bollinger Bands indicate that the price has already broken below the lower band, and both the RSI and MACD are showing aggressive downward momentum. The Ichimoku indicator reflects a similar sentiment. In summary, this analysis indicates a clear potential for a market crash. It is challenging to determine support and resistance level at this moment, so we should continue to follow a wait and watch policy. Thank you for watching and stay tuned.